Good weekend, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for Sunday evening, and we're now on the 23rd of October, 2022, 5:45 p.m. Central Time. I decided that I might as well wait. Let's see the impact of follow-through in the stock market, if there was going to be any, and we're getting it. See how the dollar was going to fare. I think that's pretty important for the metals. What was going on in the UK, and it appears that Mr. Johnson is not going to run. See what went on in China, and President Xi, as expected, got his third term. All the old reform people, those very close to him, are out. They are all being replaced now with new members that are his buddies, and they are the old school. That's what you're getting. Now, there's some younger guys in there, don't get me wrong. You're getting some younger people, but they're not that open-minded to the way that the West is. They're more going to be along the line of what President Xi wants, and obviously he's really wrapping power around himself. More important, he is holding on to his COVID policy. He hasn't made any word change about that. If anything, as I told you, they're building new internment camps for it. I saw not one word about the property market or infrastructure. So maybe I'm missing something, but that doesn't sound that friendly to me. At the same time, they continue to be the major buyer of Russian oil, and it is staying well bid. In the oil market, we have word that came out of different associations that deal with shale and other parts. The heads of those associations are looking at President Biden. They're going, no, sir. We are not going to go out and spend money and do more drilling and increase the production. For what? It takes us X amount of time and money to get the wells done, get them up, and then you're going to shut them off again as soon as you get your SPR bill. Number two, what makes you think oil's going to $70 a barrel? From here, that's a pretty big break, $15 a barrel. Especially if you, I'm not in that, think the stock market is bottoming and suddenly the economy's getting better. I'm not in that camp, which opens us to the event of Friday, where the marketplace listened to a number of three different Fed members saying that at the November meeting, it is time to bring up for formal discussion how they stop the rise of the interest rates, pause, and decline. Okay? That's a game plan. That's not an enactment of the plan. They're going ahead with the 75-point hike, and you, I, and they, nobody knows what the CPI and the jobs data is. But everybody wants to be in at the bottom. I don't need that. Okay, if you talk to pro investors, number one, they're buying, the big pros are buying little bits on the way down. They realize price averaging is their best bet. Number two, traders will wait for confirmation of a bottom. There's different ways of going about it. Other investors will just say, now that they're opening discussion, yes, it is time for me to deploy some of my funds. I get it. I get it. Nobody knows where the bottom is. Nobody also knows when Fed Chair Powell is going to pivot in any manner. Pivot being just staying at 50 or 75-point hikes and not moving for a while, or dropping from a 75 to a 50-point. I think November's a lockup still for 75 points, but as I've said here repeatedly, nobody knows if it's 50, 75, or 100 for December. What if CPI and jobs data come in a lot stronger? Because we have a November 2nd meeting, then after that we get all these reports. What if they come in a lot stronger? You got a new problem. I don't know. When I look at the gold market, okay, you're up starting the week, up 0.2 for the month. Did you hear what I said? For the month. So you're flat. This is already the 23rd. When you look at the weekly chart, we're getting a bounce in the market right now. We just saw it up $8, $9. You can see it right here, up $11 right now. But you have a lot of resistance right above you. You have the 200-week average coming in at 1688 to the 18 at 1714.5, and you don't break the downtrend unless you get over the last rally high of 1728. What bothers me, and I have told my traders, no, I don't think that it's worthy on the weekly chart of a short sale there, is we're still laying down into an area that if you've gone here in the past and you looked, it's not an area where you often, off of lows, get much of a bounce. Can I find one? Right over here. maybe what I should be saying, off the lows, and this is what I meant to say, get much follow through to the downside. You get more times than not a bounce. That's what I was trying to say. Said it backwards. So I can see that. So I don't think you're going to track new selling, but I'm not convinced it's time to be a buyer. When I look at the swing lines, lower highs, lower lows, that's bearish. Now, if you look here, you have a reading of 1622.80. Let's back off a little bit from here. And what's the low prior to that? So we're going to come right in over here, 1613. So suddenly, because the market tonight is higher, made a higher high than last week, we have higher lows, lower highs. You're doing this. So the market, going with my thought process, is saying, probably not the time to do anything. Let's see how much it can rally. And that's what the market's trying to do. It's almost like going to form a triangle here. What's that going to end up in? When you look at Bollinger Bands, the first challenges of them right here, these three, along with, and I said that, the 200-week and the Bollinger Band, that is where I teach. I'm going to redo my whole charting course, by the way, make it better, but I'm keeping Bollinger Band separate as I am in outside days that are yet to come. That is where the smart money just calls it a day. Why? Because the 200-week average is a 4-year average, and sometimes you want to play with it. Now, it has stayed under it enough where I think it's still resistance, not support, okay? It got under it. It tried one time to get over it and hasn't been able to. It's got to prove it can stay over it. So I still see the bears using that as a bearish posture. Momentum, as I pointed out, not interested in selling that kind of number, period. I'll walk away. Embedded, I would. The gold-silver ratio, you had your rally in silver where it was weakening against gold, and on the longer-term chart, it's saying buy silver over gold. And if you look at the silver market, it is over the 18-week average. Gold isn't. The market's just playing around here. Unlike gold, which just came off the 200-week average of the lows, this went to the 200-week average of the highs, probing, can it get through there? And that was all of 3 weeks ago or so. So keep that in the back of your mind. In the copper market, copper's just languishing here. I think the traders have got the same problem I do. What's China doing? And they haven't given us any clue. And the market's still in this pattern of stuck between the 200-week and the 18. I don't know what to do with that. Platinum, up, time to get out of the longs. You're at the 200-week and the upper band. If it's good enough to come out on the downside, it's most certainly good enough to come out on the upside. We'll see what it wants to do, but I can't be a friend of that up there. And in the dollar, well, you lost the embedded reading. What do I mean? All right, follow me. Okay, keep coming. Here we go. Now you'll see that these numbers are staying, both numbers over 80 for weeks on end. That's what you want to do. When that gets lost and you get a reading under 79, 79, did you hear what I said there? You're at 82. I don't think you want to be long anymore. You're gone. You're gone on that Friday afternoon, your history. So this was the close this Friday, and, and this is where you're at right now, about still where you closed on Friday. But you've lost that upside momentum. It's time to walk away. Can the market change it by the end of the week? It certainly could. If the market had both numbers back over 80, not necessarily 81, it's re-embedded. Let's see if it can do it. Don't know. So that's news. So you put it together, you try to come up with the game plan. But this is why I use this so much along with the Bollinger Bands. And as I told people, I've been working this week on laying out a format of lost embedded signals. So if you had a bullish signal and it's lost, and often you get back to the 18-week average, what percentage of time did they work? What did they make? Blah, blah. And I'll probably go back over the last 6 months and accumulate them going forward into next year, maybe create a service for that. I think it'd be interesting to see because it happens so often in stocks, ETFs, the futures. Probably need somebody to help me with it. But I think I'm going to do that. And between the way I teach this, it could be a whole new game that we take a look at. Maybe you go short with an option against it to make sure it doesn't bite you. There's many things we can do. Not going to think it through just yet. I'm opening my mind to it. But I'd like to teach you this. It's easy to learn. It's 13 chapters of videos. Each one's about 10 minutes long or so. You see what I do, you do the same thing. You get this charting software, exactly my charting software with the course. It normally goes for $60 a month. That comes with the course. Then you're going to get access to my morning videos, my subscriber, ETF, and my futures for 2 weeks. A month of each together, a combo package is $28. The whole course is $90. You got your value right back in your pocket, all right? How do you find out more about it so you can take a look at it, see what's going on? Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.